You're watching Market Sense. Time now to check in on Europe, which should open in seconds from now, really. But we've got Jeremy Cook, who's chief economist at World First, joining us now on the show. There you have it. The market has opened. Paris marginally in the red, London marginally in the green, and Frankfurt should open any moment now. But Jeremy, to begin with, what do you expect? We don't have any key events to look out for, but what do you expect the markets will be watching this week?
Certainly over the course of this week. I mean, today we're looking at German factory orders. We've seen that Germany's obviously been dragged into the mire over the past few months, and the data out of Germany has started to creak a lot worse than it was at the beginning of the year. For example, the German IFO, the German ZEW, the business confidence surveys have started to fall. We're going to expect to see some kind of fall off in the factory orders as well. German factory orders come out at 11 o'clock. British summertime this morning. They're forecast to fall by 0.8%, which would be obviously a fairly large fall for their industrial base. Over the course of the week, Bank of England inflation minutes, Bank of England inflation report, even which comes out tomorrow, will be a key thing for people who are interested in the pound. We've obviously saw the Bank of England increased quantitative easing by £50 billion towards the beginning of last month, and given the pressure is now on the ECB and now on the Federal Reserve to also loosen monetary policy, we'll see just exactly what the Bank of England is thinking. To be honest, I think that they'll say they've done almost what they can for the UK economy, and it's all about what happens in Europe for now. So that'll be the main thing. But to be honest, we are in the August doldrums. Trading is fairly quiet at the moment.
Right, Jeremy, even though the European markets are seeing a bit of a mixed start today, I think the undertone does seem to be a bit positive, and there are a lot of hopes hinging on the ECB that they will act in the coming weeks in order to salvage the crisis that the Eurozone is currently facing. Do you think that, going forward from here, that some concrete measures are likely to be taken?
I think so, and I think we see over the course of maybe the first 2 weeks in September that the market may get what it wants. We see that the Fed obviously has its Jackson Hole Symposium, where QE2 was announced last year. That was announced at the Jackson Hole Symposium, but that happens on August the 31st, so people are looking for that as a date where the Federal Reserve may come out and loosen monetary policy further, or their first actual meeting, which is on September the 13th, off the top of my head, the first couple of weeks in September. And then obviously, when we heard from Draghi last week, he said it basically sounded like they knew exactly what they wanted to do. They knew they had to go out and buy these sovereign debts from the peripheral European economies. However, they're not sure how to do it just yet. So it looks like they are going to work that out over the course of the next month, and hopefully, come the September meeting, have a plan to put towards the market. But yeah, we're kind of gradually a little bit risk on. As I said, it's a mixed open equities wise, but euro-dollar continues to trade a little bit more solidly. Euro-sterling is up near 80. That's a 1 month high in euro-sterling as well. So European assets are looking well favoured so far, but obviously we need to have a plan soon, otherwise it's going to drop very, very quickly.
And highlight for us, Jeremy, where you see the euro headed in the long term against the US dollar.
I'm not one of these people who think that euro-dollar trades down to 110 or 115, that kind of thing. Our near-term base is around 118. That may happen in the short term, just on general fears. For example, once Angela Merkel and the German politicians start to come back from their summer holidays, they're obviously going to want to talk about the bond buying program now, anti the bond buying program, and therefore we could see some negative headlines drive euro-dollar back down towards the 120 handle below that. But I don't think we see anything too much lower than that. So on a 6 month term, we're looking for euro-dollar to be around these kind of prices, about 125 to 127, and on a 12 month term, back up towards 130.
Thanks very much, Jeremy, for taking the time out and joining in with that perspective on the European markets. It's been a bit of a weak start for them, given all of the uncertainty that's looming large as to what the ECB is likely to do next. But meantime, you had Italy, which called for a confidence vote in the lower house of parliament in order to accelerate the passage of more than €4 billion in spending cuts this year. The cuts, which were backed by a confidence vote in the upper house last week, will enable Italy to delay a planned sales tax and rein in its budget deficit. Monti called the vote because it accelerates the passage of the bill, which he once approved before the summer recess. He is considered certain to win, as his parliamentary allies have guaranteed their support.
Well, the ECB has clearly said that they will support countries that reform themselves if there is a rescue package, so if there's political approval for ECB aid in a way itself. So now we're looking at two things. One is, will Spain and Italy actually request help, and under what conditions? The other question is, will the Germans and their allies actually approve such packages?
It's possible that Spain and Italy will not require a bailout, and certainly in terms of structural reform, we've had governments which have been getting on with it fairly quickly. So if they do get a bailout, I think the conditionality will be far less strict than it has been on Greece and indeed than it has been on Ireland.
Right, let's bring the focus back to the domestic markets and get a check-in on what the outlook for the currency space is. We've got Manisha Gupta joining us. Manisha.
Well, thank you so much for that, George. The rupee is trading at a one-week high. There are supportive factors coming in from the Indian markets and global markets as well. Especially in India, there has been a statement from the finance minister where he said that they would unveil a path for the fiscal consolidation and also review the tax provisions. That has been supportive for the rupee. Also, the euro holding around that 1.24 mark, and there are statements coming in from Germany's Merkel that they are backing ECB bond buying plan is something that has been supportive as well. It is, of course, the oil demand coming in, which is putting some pressure onto the Indian rupee. For the day-to-day though, most of the broking houses are expecting a further appreciation for the rupee. We spoke to Angel and Nirmal Bang, and they have a sell on the USD INR pair with targets coming in at around 55.40 to even 55.15 on the lower side. Though there is a buy call as well coming in from Alpari, and they are looking at levels like 55.90 in the intraday market today itself.
Many thanks, Manisha, for giving us that perspective on the rupee, which is continuing to gain for a third day on the trot.